Rajesh and Marguerite and Kate for putting on such a great event. I think the quality of the people I've met over the last 2 days, I think, is a testament to how optimistic you all are about India. So anyway, my name is Paul Singh. I'm a partner at 5 Minute Startups. We are an early stage venture capital firm headquartered in Mountain View, California.
I think the mic's on.
Is that better? So we're an early stage venture firm headquartered in Mountain View, California. We're relatively young. We're about 2.5 years old now. But in that time, we've invested in over 400 companies in 20 countries now. And so I'm going to break the rules a little bit. I'm supposed to talk about the changes that we're seeing in Silicon Valley, but the reality is I think I spend more time outside the valley than I do in it. So we'll just see how this goes. So I want to first start by just sharing our book. It's actually the new version. All right, so these are some of the countries we're in. We're taking a special interest in India as well. But in any case, let's start with the first thing, which is one of my favorite quotes. And that is that venture capital is open to attack by disruptive new business models in tech. And that was actually said by the founder of AngelList, which I think is one of the most profound changes that we've seen in Silicon Valley and on the planet recently, at least in terms of the startup ecosystem. And Jeff mentioned it, Jeff talked about it briefly. But what it really did at its core is introduce a new layer of transparency in that founder-investor ecosystem. So it's playing a very important part. The next big trend that we're seeing, I think, is this increasing unbundling of advice, control, and money. It used to be the case that all three of these things would come from the investor or from one person. You don't have to agree with me here, but I would just say that if you just look around you and you look at many of the funds in India, even our fund, there's an increasing number of funds that actually have venture networks, right? And that's just one example of advice being unbundled from control and money. The third thing, I'm going to just start with a cliche, and I apologize for it up front, but I'll just say that early stage VC has changed already. And as an aside, the funny thing about our industry is that we are not very sophisticated at all. And if you don't agree with me, just count the number of times that you've said, I think or I feel, when you're making a decision about whether or not to invest in a company. But that being said, so early stage VC has changed already, and it's been forced to change because early stage startups have already changed. And what I want to do is just spend 2 or 3 minutes just kind of deep diving into the underlying trends there that are causing this. The first thing is that startup costs continue to drop. So cloud, open source, and online distribution are dropping down. Again, Jeff spoke about that as well. As the web continues to get bigger, the world is getting smaller. What I mean here is that it used to be the case that you had to be in the US to raise money, you had to be in the US to be close to your monetizable audience. But that's increasingly changing. But I also think the important thing that a lot of people aren't really talking about is as more Indian consumers come online, and as they get more comfortable buying online, what's also going to happen is you're going to be able to have startups in Brazil or America or Chile that are building products for this market. So that's a really important trend. The next thing that's driving that change also is that traction is the new intellectual property. Tech differentiation doesn't really matter anymore. For the investors out there, what that really means is that you should be avoiding investing in ideas. For the founders, it really means that you need to build something, get a prototype out before you actually go to the investors. Capital is increasingly commoditized. Never mind the number of angels that's increasing everywhere. You've got the NRF program in Singapore. You've got lots of different programs in Chile and South America now. I think this decade will be remembered as the rise of the angels, the rise of the party rounds and things like that. And what it's really doing is it's actually changing kind of the way that money and founders meet. It used to be that founders would come to investors and kind of come to the ivory tower and pitch up. But the reality is that money follows founders. The paradox actually of investing is that we all want to be in the most, we all want to invest in the most successful companies or the hottest companies, but the reality is the hottest companies don't really need us. They can create a market, get money from anywhere. And then I think the biggest thing that really is changing early stage venture capital now is that signals are everywhere. And by signal, actually what I really mean is transparency is everywhere. And just as a quick aside, I'm going to just share with you some public market examples so I can make the point. So in the interest of time, I'll just tell you what this is. These are photos of Walmart parking lots. Is Walmart here in India? Does everybody know what Walmart is? Yeah. Okay. So these are Walmart parking lots. And UBS, which is a large bank, calls this satellite parking lot fill rate analysis, which is a fancy way of saying that they pay a satellite every hour of every day, and they count the number of vehicles to figure out what the head count or the foot traffic is through the door. Right? This is another one. For those of you that follow the U.S. financial markets, our market is heavily driven by the cost of oil. All oil in the U.S. is actually traded on the New York Mercantile Exchange, and all oil that's traded on that market is stored in those tanks in Cushing, Oklahoma. That picture on the right was very hard for me to get, and you can see how ratty it is. But what it is a close-up of the roof of each of those tanks. And why that's important is the roof floats. And there's a company named Genstate that actually flies a helicopter over those tanks twice a week to look at what's happening to the roof. Because if the roof is going down, you could assume that oil is being pumped out to the market. If there's more oil in the market, what happens to the price? It goes down, right? And if I fly over the tank and I see the roof going up, I can maybe assume that oil's coming off the market, right? So the point is that Wall Street isn't alone. If you've ever taken a loan, if you've ever gotten insurance, the point is data is included in those decisions. It turns out we can do this too. You probably recognize some of these logos. There's probably 80 different sources that you can get data from. I'm not suggesting that these things are replacing early stage investing. It's not replacing your gut. It's not replacing your pattern recognition. But what it is doing is it's something that you can add to your decision making. It turns out, though, that people are already doing it. And this is the interesting part, actually. These are some of the firms that are doing it right now. One thing I would just point out, just to give you a sense of how much money is going into this kind of stuff. Google Ventures is $300 million that's being invested through a model that has quantitative metrics in it. Correlation Ventures just closed a $165 million fund. It was super oversubscribed. And that was their first fund, by the way, using this sort of model. And you might recognize a few of the other ones on there. So the last thing I'll leave you with is one of my other favorite quotes, and this is from Michael Lewis, who's the author of Moneyball. And that is that by its nature, the internet undermines anyone whose status depends on privileged access to information. If you remember nothing else, I think the biggest change that's happening, if you remember only one thing, the biggest change that's happening in our industry is there's an increasing amount of transparency everywhere. And that's actually a good thing, unless you were trying to screw somebody. So, again, thank you. My name is Paul Singh. I'm at 500 Startups. These slides are online. I just tweeted the link out. I'm reachable at Paul at 500startups.com. So, thank you.
Thanks for sharing that quote. Maybe we can